Hello, this is Dale from Loan Cabin. Happy Friday. I'm here to talk to everybody, and I've spoken about this before, about getting pre-approved for a home before you go out and look. One of the biggest mistakes that I see is people or loan officers mainly overestimating what your qualifying income is, and that can cause problems later in the process. You really want to take the time to really determine, or have a mortgage professional determine what your actual qualifying income, and it's always good to err on the conservative side. So if you're an individual who is an hourly employee who works a lot of overtime, you're going to want to get a verification of employment, or your loan officer to get a verification of employment, to separate out those earnings, to look at your base pay, which is your hourly wages, and then the average out the overtime earnings. I mean, if you're in a situation where there's declining earnings, an underwriter may not use any overtime, or if it's up and down, they're definitely going to blend an average. But you definitely want to maybe have your loan officer, most of them I think would be doing this, order a verification of employment, which is going to separate out those earnings and allow your loan officer to make an intelligent decision on where you can qualify. In a lot of cases, for me, if I have a client who's got a high debt ratio, close to the ceiling on what FHA, for example, would allow, I have no problem submitting the deal to my underwriter and having them look the income over to make sure we're all on the same page. So it's something worth the extra effort up front to save a lot of problems in the end. And then bank statements. If you're obviously most buyers, if not all buyers, have to turn in 2 months recent bank accounts or bank statements. And in those bank statements, you want to make sure if you're transferring money from other accounts, you're going to have to source those transfers. So a lot of times you may have to produce another set of bank statements. If there's insufficient funds, that could be a problem. That's looked at as a derogatory piece, almost like derogatory credit. So you want to keep it simple. If you're transferring money back and forth between accounts, but you have another account that's kind of idle, a savings account, it's easier to use that instead of going back and forth to get deposits, sourcing this, sourcing that. And obviously your earnest money, wherever you withdraw that money from on a purchase, you're going to have to source where those funds came from. And then on your job history, I spoke about that earlier. Your credit report, any recent or any late payments in the past you have to address. In a lot of cases, we do use automated underwriting, but they still have to be addressed. Any previous addresses, any name affiliations, we have to do what's called a credit inquiries disclosure. So these are all little things that don't seem like much, but that are very important to take care of up front. So as you get into the process, you want to assure yourself a smooth transaction. And if you have any questions on this, feel free to call me at 630-479-2719. Like my page on Facebook, and please share it with your friends and family. Thanks.